basically, right, we start off from a supply zone in daily, followed by looking for the liquidity that the market has left us, right? That's how I analyze the market every day I wake up, right? So I look for the liquidity that the market has been leaving us, and I go from there. So, for instance, here, this is liquidity for the market to go grab it. And now I go down to the 4 hour time frame and I see how the price has is giving me internal break of structure. For instance, this is a break of structure. This is another break of market structure. And we also see how price is invalidating that order block of daily. We're looking how it's having a reaction in that time frame. So here I'm marking an order block of supply followed by a break of structure, meaning the graph is still, and my tendency is to keep buying in the market. So I go straight down to 15 minutes. I break down the graph and see what is the price telling me based off what I saw on the higher time frames. For instance, right, the higher time frames told me that I was coming from a zone of supply, right? Therefore, once you wait for your confirmation, you would know you have to sell all the way to a zone of demand. And that's what I did. So I waited until my next session in London, pre London, and I analyzed from there. What could you see? Well, you see how price took liquidity but didn't break with a candlestick, with a body candlestick, meaning that the pressure for buyers wasn't there. So immediately I saw, okay, then if that's how it is, I might as well sell unto where? Oh, into the zone of 4 hours, which was the zone of demand. And that's what I did. Look, as you can see, here I'm marking the zone that took liquidity, showing me that the sellers in the market and the institutions, they want to sell the price. Followed by that, I was looking to see what other zones the price could have left, to keep buying, and I had already checked that. So I immediately looked for my order blocks, followed by the liquidity as well, looking to see where could price go and react. And so I went down to different time frames to see what price would do. I went to 4, 5 minutes, three. I was playing around with the time frames, to see which which order block would be the correct one, which would have you in balance, and a block or an order block that hasn't been mitigated. So I found the extreme order block, which is the order block that starts all the market structure, that starts all the movement, followed by a decisional point, which is the order block that decides which market structure to break. So if it's going down, the order block rejects the zone of demand and goes into supply and then breaks. So I went down, I kept going down to see another what order block I could find. And here I found this order block here. I was trying to find the decisional point actually. And I found that tiny decisional point right there, as you can see. And I marked it. It was a very interesting zone, especially since, look, the zone rejected the zone of demand and it went into supply. That zone was very good. Besides that, it also had liquidity standing right below it. So, and the order block hasn't been mitigated. So it gives me even more validation that the price can still go there. And so that's how I, analyze the 15-minute time frame. And I use the lower time frames to understand my order blocks to have a better validation, meaning where the price were to go there, is it gonna give me a reversal or is it gonna break my order block and go somewhere else? Okay, so here you go. Once I marked both zones, the extreme zone and the decisional point, the only thing that was left was basically, to put your entry and pull the trigger, pretty much. And that's exactly what I did. So here in the GBP USD, I took a short. I took a short. I tried to put a little bit of stop loss on both entries, but I did what I could. Going down from lower time frames. But everything was good. So here, yeah, here I started putting my entries, and let's see what happens. Okay, so right now I'm putting my order for the decisional point. I'm gonna put around. Let me see how many stop loss. I'm gonna put a little bit more than that. Let the price breathe a little bit. We don't want to end up in stop loss and give the entry does good and we lose. So that was the decisional point, followed by the extreme zone and the take profit, the TP. I decided to point it to the next zone of demand in 15 minutes. Why? Because if price were to give me a reversal, I would like to sell all the way to that time frame of 15 minutes. So therefore, in my mind, I was like, okay, if I'm gonna sell, I might as well sell to the next zone of demand, which is closer to the price, which in that case is the 15-minute time frame. And that was the order block, and that's where I put my take profit to secure my profits. And then I just let it play out. Boom. Order activated. And I immediately, as soon as I saw that movement, I decided to take off that entry in the extreme zone. Why? My security of the trade hitting take profit was more because I knew that when price reacts from your order block in a strong way, you already know the price is good because the way that it reacts to the order block, like for instance, if the price were to go up, for instance, in this way, it would go up slowly and then drop slowly, then it's giving you a notice that the price is not really gonna give you that entry. Might as well break the order block, So that gave me a validation, to delete the other order I had already placed. So that was that at that point. And then so I let it go and I immediately went to see how price would move. So then I just let it play out again. I started moving it to see how the price would react and all that. So I had already probably like 1 to 3. I would have probably closed partials and all that. I would have put break even as well, to secure my profits as well. And that's pretty much it. So I just let it play out and see what happens. Let's see what it does. Okay. Price gave me a break of structure. What would I do there? Well, in the market, I would just, give another reentry. So that is another order block that I would choose to take another entry right after that one. Why? Because for instance, that order block has order flow. It has the price already took liquidity off that order block, followed by a break of structure. So and on top of that, price started to fabricate liquidity for that zone. So that was a very good zone for me to take another re-entry and kill the market even more. So let's see how that um plays out meanwhile. And as well, my take profit, I placed it on the same zone of demand. And just like that, price made liquidity for me. Made me think, look, and then right there, the price activated that zone as well. Ooh, take profit almost there. And then it gave you another re-entry. Don't get too hyped out now. Like it gave me another break of structure. Like if you know the price is in the right trend, you know that you can keep re-entering in the market after a break of structure. Remember, the break of structure is the most important thing. One of the most important things when you're understanding 15 minutes. Why? Because with the break of structures, you're going to understand the movement of the price and its intentions of what it wants to do. For instance, here, I knew that it gave me another break of structure, meaning the sellers entered the market, the institutional traders entered the market to sell. So I knew it. I knew immediately. Oh, I could continue selling the price down. So I immediately looked at the price. When I saw that break of structure, I already knew. I already knew what I had to do. Well, since this order block was mostly candlestick, it wasn't like a whole body stick. It was just like a stick. I decided, to go down in time frames. Every time you don't see an order block clearly, the best recommendations as a trader is, play around with the time frames. The lower time frames is your friends. They're not gonna betray you at all. So just go down like 5 minutes, 3, 4, 2, 1, until you find something you can understand visually. Whatever you can see and you understand, you can just go down and look for it. That's exactly what I did. So I let the market run all the way to the London session. I usually operate pre-London because all my analysis that I do it before the movement happens. So I just leave my program orders. I go to sleep and I just wake up either with a take profit or stop loss. That's how I run my plays. So here, after that break of structure, I immediately knew, okay, I can take the sell. Now, where could I take it though? That's the question. So what did I do there? I immediately went down to the lower time frames and became friendly with it. This helped me out very much because I was able to find the correct order block necessary to take the entries. For instance, look, I went down, I kept going down in time frames, looking for the right one, looking for the right one. I was trying to see which order block was gonna be the one. Like I even marked it. Oh, I saw that order block because it had liquidity, and on top of that, all that movement is just noise that the price does to confuse you. There's only one real order block, one real direction. You know, when the price wants to sell, it will sell, no matter the situation. And if price wants to buy, you will buy no matter what. Here, in this case, you were supposed to sell, sell, sell. That's exactly what I would have done. Therefore, I sold the price down to the 15-minute time frame of demand. Just like that, I let I took another short and I just try to see what the price would do. Now, if I were to win this trade plus the other two that have been activated, I would be winning a 1 to 32 risk reward ratio. What this means is if I were to have, let's say, for instance, a 200K account and I do a 132, I would be winning 32 times 1% of 200K, which would be 2,000. Now you multiply 2,000 by 32, that's a lot of money. You're making in one day. Me, as a smart money institutional trader, I saw, oh, look, price gave me a break of structure. It had liquidity. I had the correct direction, which was the daily bias to sell to the zone of demand of higher time frames. I had all my analysis, all my rules set and ready, and all I had to do was pull the trigger. That's exactly what I did. Look, if you look at the higher time frames, I went up there and I saw how price without it, without the higher time frames, I would have been able to do anything. Why? Because the higher time frame is what gives me the direction to understand what I'm gonna do in 15 minutes. So if I don't understand that, I'm gonna be lost. And just like that, I took another entry here in this order block. This order block was sexy. Look how it mitigates. Very good. And immediately goes to take profit almost. And just like that, I have won 1 to 32 risk reward ratio. That's pretty much it. That's how you trade smart money institutional trading. Please comment down below, like and follow, and I'll catch you next time.
Holy Grail.